Well, let's speak now with Joel Griffith, a research fellow at the Heritage Foundation. He joins us from Washington. Hi there, Joel. Good seeing you. So this interest rate of 0.5% is a really aggressive interest rate. But how high do interest rates need to be to reduce inflation figures to 2%?
Well, look, our central bank and our United States government has gotten us into quite a big hole here. Really, the interest rate debate, that misses the forest for the trees. What we have here is a situation in which our federal government has spent trillions of dollars that it does not have, and it's relied upon the central bank to print dollars to buy those government bonds, and those funds have been injected into the US economy. And that's a big part of the reason why inflation in the United States is rising at the highest level in more than 40 years. Whether the Federal Reserve combats this with higher interest rates or whether the Federal Reserve stands by and lets inflation run rampant, the American consumer, the American family is going to pay for the fact that our government spent beyond its means, and it's going to pay for the fact that the Federal Reserve decided to finance the government spending by printing trillions of dollars.
Yeah, talk a bit more about exactly how you say American families will pay for this.
Well, American families are paying for it right now. A lot of individuals loved receiving stimulus checks in the mail, loved receiving generous government benefits. And of course, a lot of businesses enjoyed receiving hundreds of thousands of dollars worth of forgivable loans from the government. But we're realizing now that that has a cost, because most of that spending was financed by the money simply being printed by our central bank. The central bank printed those funds, bought up government debt, and all of that money is now circulating in the economy. And that is a big part of the reason why the typical family is seeing their grocery bill, their gas bill, their clothing bill increase at a much steeper rate than their paycheck is. It's a direct connection between the malfeasance of the federal government and Congress hand in hand working with the central bank. And today, the chair of the Federal Reserve refused to take accountability for his actions, and he put the blame everywhere but on the central bank that is in large part responsible for this rising cost of living.
I'd have to leave it there. Joel Griffith at the Heritage Foundation. Thank you.
Thanks for having me.